We reported out on summary for investors, why should companies participate, and how 4 business sectors see climate change risks and opportunities. Just some highlights from that particular publication. The climate change risks and opportunities, the perception, the degree of engagement, the impact on the company itself depend hugely depending on whether you're in high carbon or low carbon. That's an intuitive statement, but just to say it. It's certainly becoming part of future business prospects. That's encouraging. And for government policymakers, it's not correct to think that companies are standing by twiddling thumbs waiting for the regulations. In fact, the leading ones, many of them that report to Carbon Disclosure Project, are already engaged. There's a bit of a flip between high carbon sectors, which see risk dominantly, and opportunities in low carbon. Going back to my relative chart between risks and opportunities, you can see some signature there as well. Starting with oil and gas, first of all, impact on physical assets due to extreme events, etc. Regulatory risks, companies in Alberta are already dealing with regulatory risk, if you like. Alberta has a GHG regime in place now. Shifts in consumer preferences and product demand. This could be as simple as shifting from fuel-based vehicles to electric, for those of you that are fans of that particular development. Reputational risks, if one company is out ahead and appears to be greener than you do, then you're going to be hearing from your shareholders, or you may get a request to report at your annual meeting, etc. And competitive position, of course, is very significant in that regard. In terms of the opportunities, climate change can be a driver towards increased energy efficiency. Probably you were thinking along these lines anyway, but climate change may have propelled you ahead a little bit. Provide energy from new green sources. This is not only in terms of your operations, as I said, biomass for turbines along a pipeline, for example, but they also open up a broader energy offering. Rather than becoming an oil and gas company, you'll have an opportunity to be an energy company going forward. And carbon capture and storage, probably the top of list technology, although not without its challenges going forward in terms of cost, practicality, and what it means for overall plant efficiency when you hook it up to a coal plant. In terms of raw materials, you'll start to see some similar messages here. Compliance with climate change regulation. Interesting word, compliance. Capital expenditures for retrofitting. This may be premature in the capital stock turnover cycle, and it would cost you as a consequence. Higher operating cost if you need to add equipment to your plant in order to recover GHGs. Extreme weather events, this is particularly true in northern operations. Expect more of them if you like. Transportation costs, this is the winter road example in one case. Sea level changes are very significant if you have coastal operations. We've heard from people in the Atlantic Canada and some of our adaptation work, for example. Port of Halifax is an example where they're quite concerned about the long-term sea level change, which is passive, if you like, but happens inexorably. But if you combine that with a perfect storm, high tide, winds blowing ashore, etc., then it gets pretty serious. And again, reputational risks, not only for you as a company, but you relative to your competitors. Some of the opportunities, reduced operating costs, longer growing seasons, the forestry sector, for example, more carbon in trees, faster turnaround in terms of plantings to harvest, greater access to resources, ice-free Arctic water, for example. Offset credits, if you do take action, you do reduce your emissions, you'll have some credits in the bank that you can sell or trade. Utilization of damaged forest biomass, as many of you would know, pellets from mountain pine beetle, wood in BC are being processed, put in boats, and sold in Europe as green fuel. Product innovation, lightweight materials for vehicles, new batteries, new lithium products, etc., and new commercial products as well. Electric utilities, major issues here, particularly for fossil-based electric utilities, as we have in Saskatchewan. Regulatory risks, climate change legislation. Physical risks could reduce the water flow to hydroelectric projects. We've seen some of that in BC and Quebec lately, which tends to reduce output and access. Drought can not only reduce the cooling water supply, but it can also warm up the water, so your overall efficiency of cooling is decreased and your plant efficiency overall is likewise decreased.